do you think that what we're going to learn over these next 24 hours from the economic data and from the Fed's summary of economic projections and the dot plot, do you think we'll finally get a little bit more clarity here about the direction of policy?
We have our two for tomorrow with CPI and FOMC data coming out. I think, first of all, with the FOMC, we're going to be watching two things: the dot plot and any information that they give us on the direction of inflation. For the dot plot, I think we may see that shift down a little bit to 2 cuts or maybe even less. And also when it comes to inflation, they may be talking a little bit more about inflation remaining sticky and above the Fed's target, because switching over to CPI, that number as well as PCE are still well above the Fed's target, running at about 3% on a core basis year over year. And we're going to be watching auto insurance, which drove CPI higher last month, as well as apparel prices, which drove CPI higher. Those are the two areas where we'll be waiting to see, will they cool off a little bit? But as of right now, the Fed's hands are tied. They cannot move to aggressive rate cuts because inflation is so far above their target.
Are investors' hands tied right now, Saira, when you take a look at that?
I think investors are willing to accept this move down in the number of rate cuts as long as the economy remains strong and we see that inflation is not reaccelerating like it was earlier this year. So I'm probably going to be a little bit more focused on that first CPI number we get. Do we see signs of inflation reaccelerating because of, for example, payrolls that were so strong last week and wage inflation that has been strong? If that points to an acceleration in inflation, I think markets will become concerned. So CPI at 0.3% or under that, I think will be okay for the markets. We move much higher than that, I think the markets get nervous.